Hey Trade Pros, it's Victor from Trade Pro Academy, and today we've got a special video for you. We're going to help you guys refine your trade entries. So we're going to give you a very secret tip on how to get better trade entries when you're day trading the equity future market or any other future market for that matter. You can actually take this to any asset you guys want and apply it there. If you guys are new to this channel, please hit that subscribe button so you do not miss any more new content from us. Ring that bell to notify you when we do go live, and drop a like, drop a comment. What do you guys want to see in our next video? So let's go ahead and get started with this. Now, if you guys are looking for the perfect trade entry, how to get that perfect trade entry, unfortunately, I have some bad news for you guys. There's no such thing as a perfect entry. However, there is a such thing as a high probability entry and a very good exit. Now, what makes a trade a bad entry or a good entry? Some might think, okay, a good entry equals direct profit right away. A bad entry is that your stop gets hit right away. Now, there's a correction to be made there. Just because you get into a trade that hits profit right away doesn't necessarily make it a good entry. The entry doesn't matter as much as the exit. Now, how many of you guys have gotten into a trade, gotten stopped out, then seen it go in the right direction? Now, there are a few tips and tricks to get by this so it doesn't really happen to you, but that doesn't necessarily mean that your trade was bad. Maybe the entry needed some work before you got into this trade direction. Now, there are these simple tools, one being imagine where your stop would be. So you're placing your entry based on your stop to increase the probability of that trade entry. So if your stop is below a support level and you're looking to go long a strong support level, if that stop is below that, that's how you base your entry idea for your trade. Now, if you get stopped out below the strong support structure, that also means that a lot of big money is also getting stopped out because you've identified a very key support area. Now, this is based on a stagnant stop that you guys use. We use a certain size of stop, others use different sizes, but that doesn't mean you put your stop down here and your trade entry is way above where it naturally would be. So that's one little quick tip, and we're going to look at that when we jump on the screen very shortly, and how to combine that with order flow. Now, order flow is the key to our high probability trade entries at TradePro Academy. We use order flow efficiently in the futures market when we day trade the S&P 500 oil market and gold market. So join us in the live room if you guys really want to see how that happens. But order flow tools such as the footprint, which we'll look at, level 2, or the DOM, and the heat map, which are kind of the same thing, but those order flow tools indicate buyer interest, seller interest, and also buyer activity at market and seller activity at market on the footprint. So how many sellers have hit a level at market? How many buyers have hit a level at market? Why is this important? Why is order flow important? Because the interest of buying and selling dictates the market. If there are more buyers than sellers, that means the price will go up. If there are more sellers than buyers, that does mean the price will go down. So we're watching these order flow tools not only to identify the trend and interest, but to identify those very high probability levels for the continued trend trade. Now, going back to the bad entry area, it's mostly about managing the trade and the exit, and that comes down to scratching. So what is scratching? Scratching is getting out of a position for a tiny loss, a tiny winner, break even, which is a little more normal for seasoned traders rather than newer traders, but that doesn't mean you newer traders can't practice this technique. If you identify disqualifiers against your trend, then it's better to scratch and take a full loss and look for that better entry. Now, if you refine your entries to higher probability entries, as will be explained very shortly on the screen, then you will limit the need to scratch more, but still scratching is a very key tool to have in your arsenal. So let's go ahead and get started. We'll see you guys on the screen. And the footprint is something that a lot of you have seen before, but if you haven't, check out this video right here. There's going to be a card that explains the footprint, so we don't have to waste too much time going over it. We're going to be focusing on refining those trade ideas. So guys, now that we are on the desktop here, the screen is sharing, we can show you what we mean. We are going to reveal our one tip, our one trick to identify better trade entries when you are trading the futures market. In front of me, we do have the S&P 500. However, this trick could be used for any other market, any other asset. Trick number one is identifying the direction of the trend. So in front of me right here, we've got a 4-tick chart. Very easy to see. I just circled it in red. But what we're going to do is identify some support structure, trend structure, and then our trade entry potentials before giving you that one order flow trick to identify better entries. Now, if we do have an uptrend, a clear uptrend as we do here, identifying very key support levels such as these right here are pivotal to this strategy, because what we're going to do is identify this support structure. So right now when we come back down into these areas, these 80s, 81s, this is going to be our support structure based on the previous broken high, and these sideways price action moves right here that hold support. We will identify a stop loss, remember, like we said, below that area, just enough so we have an entry inside some of the structure. Now let me show you on the order flow how we can combine those two tools to identify the best possible high probability trade entry area. So again, like I said before, we identify the level first on the 4-tick. Where do we need support to hold? And we identify a stop loss below that. And based on that, using a 5-tick stop, 1, 2, so right here, 2 at the halves, 3, 4, 5, somewhere in this area, we should have a entry idea if our stop is going to be below this structure. Now, you can see what is going on right here. This is the footprint. If you guys want to see a full-on explained footprint video, please check out the card on the screen. But if we use order flow, remember the sell imbalance and buy imbalances are strong buyers or strong sellers in the direction of the trend. Strong buyers are the buy imbalances, especially on long extended candles like this. If you see stacks of buy imbalances, those buyers are the last chance for the upside to hold. These guys are going to try and protect their areas if price manages to come down into them. So we've got 3 levels of buying right here, and we just used our support trick. So our entry would be somewhere within these buy levels. You could try buying just a tick at the buy imbalance or below, or if you have a very close long extended candle with a buy imbalance stack, somewhere within that area. Now you can see these guys are bids. So another order flow trick here. This is translated from the level 2 from the DOM. These bids are large bids with interest of buying. Now the idea is price does not go and clear them, otherwise we could see more downside. The idea is price stalls just in front of them before we see the pop. And where would that be? Right where these buy imbalances have stacked out. So increasing your trade entry probability based on this order flow trick, using the buy imbalances, finding a key support level with a stop just below based on where these strong buyers have to hold, identifies a pretty strong high probability trade idea. Now let's go ahead and wrap this up for you guys. This was Victoria from Trade Pro Academy, and today we shared a very, very great secret to refining your trade entry ideas. So go ahead, try this out. If the asset that you trade does have order flow, then you guys are good to go. Try it on the futures market. We've been using Sierra charts this whole time, and drop a comment down below on what you guys want to see next. Like this video, and we'll see you guys next time.